We're joined now here on Public with a one-on-one interview with Dr. Gary Shilling. Dr. Shilling, very appreciative of your time. Let's talk about the three major indexes that continue to reach new highs. The S&P and NASDAQ rising for the last 4 consecutive weeks. The Dow notably hitting the psychological mark of 40,000 last week. What are you seeing in the market, Dr. Shilling, that lends itself to all of this enthusiasm?
More buyers than sellers. I think there are a lot of people who assume that the economy is in great shape, that we're going to have a soft landing, that there's no downside risk, and that stocks, even though they're very elevated, are going to go higher. I think we're more in a buying frenzy than we are in a logical bull market.
So how much of this then is warranted? I wonder. So we got more buyers than sellers. Should we have more buyers than sellers? Well,
that's what always happens on the way up. Now, on the way down, of course, it's quite the opposite. But yeah, I think right now there's this feeling that why are they buying? They're going up. But if you look at what's going on in terms of stocks, you see a tremendous amount of speculation. You see the Magnificent Seven. Now it's sort of the Magnificent Four. You see all the enthusiasm about crypto. You see the SPACs. You see a lot of things that suggest there's speculation that isn't very well founded on fundamentals. It's just kind of the feeling of why you buy them, because they're going up.
Let me get your perspective on earnings, if I can. Over 90% of companies so far in the S&P have reported their first quarter earnings. Nearly 80% of them have beaten expectations, according to FactSet. Dr. Shilling, is that a surprise to you? And how much should we be looking at earnings?
No, because most of those analysts are paid to be bullish. And I know that from my own experience. If you're not bullish, it can be bad for long job continuity. I found that out myself. I was the first chief economist of Merrill Lynch and got fired not once but twice by Don Regan, the CEO of Merrill Lynch, for being bearish, even though I was correct. But that's a no-no. So I think investors have to take whatever Wall Street analysts say with a big grain of salt, and they're better off just looking at it and saying, okay, fine, is this all make sense? Is it being carried away? What's the substance behind it? What is there in the economy that suggests that earnings are going to go higher and sustainably higher, not just on the basis of hope and expectations, but is there reality behind it?
Dr. Shilling, how much does the concentration that we have in these magnificent few names concern you in the S&P or the NASDAQ 100?
Well, it does. It very much reminds me of what happened in the early 70s. That was a time when you had a narrower focus, and it got down to the point that the only thing people wanted to buy was gimmick cameras. That was Polaroid. Motorhomes, that was Winnebago. Amusement parks, that was Disney. And hamburger chains, that was McDonald's. And what investors were saying, in effect, is that they didn't like the bulk of the economy, that they couldn't really find anything else they wanted to buy. And when you get that historically, when you get very narrow focus in terms of what investors are interested in, it's usually a very bad sign for upside potential in stocks.
Since you mentioned some of the kind of fast casual or fast food places, this does speak to a conversation happening with regards to cracks in the consumer. And we've seen warnings from companies like McDonald's. We've got the new $5 value menu, value meal announced by McDonald's. What do you make of some of the conversations, Dr. Shilling, you've picked up in food services and what it says about the strength of the consumer today?
Well, consumer is there's a dichotomy there. There are people who have plenty of money, and there's no real limitation on them, but that their spending patterns don't change a lot. They buy pretty much what they want. It's the lower income people that are really being strained. And those are the ones who really just are being stressed. And if you look at things like the big jump in consumer debt, in credit card use, in people trading down to cheaper venues. You see that in whether it's stores like Macy's, or whether it's McDonald's, or a whole range of lower priced consumer areas. That's where the action is, because those are the people that are really strained. Those are the people that are limited in terms of income, limited in terms of what they buy. The guys on the top, it doesn't make any difference, but the ones on the bottom are the ones, that's where the action is. That's where the volatility is. And that's what you've got to watch.
To this point of sort of a bottom up effect, your thoughts on a high interest rate environment? Are interest rates where they are now, Dr. Shilling, enough to really bring down prices, or are they having the negative impact of increasing affordability challenges for lower income Americans, to your last point?
Well, you're really saying the same thing. It's those are the flip sides of the same coin. But people who can't afford it, and of course, people have run through all the extra money they got from the checks they got with the COVID payments, and they have run through the borrowing. They have gotten tremendous boost from what they could borrow on credit cards and so on and so forth, and they're just running out of ammunition. Now that's the people on the I mentioned on the middle and income and lower income areas, but they're the ones. That's where the volatility is. Those are the people that really you have to watch, and they're really pretty much out of money.
JP Morgan Chase CEO Jamie Dimon recently emphasized the risk of rising U.S. national debt. Dr. Shilling, it's more and more pertinent to our macro conversations the last few years, now stands north of $34 trillion. How do you think lower government spending could impact in inflation and demand?
Well, that argument's been running around for as long as I've been in this business, and that's a long time. Now, I'm no fan of big government debts and deficits, because a lot of this goes to fund non-productive activities. But having said that, the idea that somehow this is going to cause a debt bomb, a situation where the debt is just so great, and we look at it in terms of interest on the debt, and when the interest on the debt, which is a component of the deficit, when that gets to the point that it compounds at a geometric rate, that's where it really gets to be a problem. Now, we're at all-time highs in that. If you look at interest on the federal debt in relation to GDP, and that's the relationship we use, you're at all-time highs. Now, how much higher can it go? Probably a lot higher. I mean, you don't really know. There's no upper limit. I mean, if it were in Argentina, you'd say, yeah, I can look at history. I know where it went, and the economy collapsed, and other countries that are in the same boat. But we've never really been there in this country. But you do know that is the ultimate threat. Unfortunately, or I should say, fortunately, we've never been there. You can't quantify it, but it is the ultimate risk.
Dr. Shilling, of course, last week we got not one but two different inflation gauges. Even your core readings still a bit too hot for the liking of the U.S. Central Bank. What's your case on the path of deflation moving forward, and how the Fed is looking at this information, as data dependent as it is?
Well, the Fed is in no rush to do anything. Now, if you look back after the pandemic, the Fed was really hell bent to ease interest rates. To increase interest rates. They wanted to really show the economy that they were in charge, but that's no longer the case, and so they really are In other words, it isn't the Fed that's really driving things now. The reality is now that the Fed is not really moving ahead. The Fed is waiting for things to happen, and there's no reason that they ought to do anything right now because the economy is growing. It's not growing that rapidly, but it's not collapsing. It's sort of coasting along, and there's no real pressure on the Fed to do much one way or the other. So I think the idea that the Fed is in a great rush to ease credit, no, not really. To tighten credit, not really. So they're just really coasting right now.
Finally, Dr. Shilling, it seems as if we've been having the potential recession conversation for quite some time. What is your view on potential recession? Of course, it's still late to see whether or not we get more monetary tightening.
Well, you've heard the old trite story when your neighbor's out of work, it's a recession. When you're out of work, it's a depression. I mean, it's obviously in the eyes of the beholder. And right now, there isn't any evidence that we're in a major recession. Maybe we will be. I think that you've had a lot of excesses in certainly in security markets, stocks. We talked about that a little bit earlier. You've had these extremes, and if we wake up tomorrow and things are starting to really crater, it shouldn't be any great surprise. But there isn't anything out there right now that says it's going to happen immediately. And so I think the Fed is just basically sitting there waiting for things to happen. The Fed isn't leading the charge. The Fed was leading the charge a few years ago when they were raising rates to cool off the economy. Now they are really, as I mentioned earlier, they are data dependent. They're following the crowd.
Dr. Shilling, really grateful for your work. Before I let you go, sir, where can people find more of what you do?
Well, they can look on our website, www.agaryshilling.com, and it's AGARYSHILLING.com. They can also give us a call if they're interested. We have a monthly newsletter, Insight. Be happy to send them a complimentary copy, and they just call us 973-467-0070. Be happy to send them a complimentary copy and see if they're interested in what we're doing. We look at the economy, we look at financial markets, we try to figure out which way things are going and where there's money to be made and where there's money to be lost.
With a New Jersey area code, nonetheless. Dr. Gary Shilling, great to have you. Appreciate your time, and thanks so much for the great perspective today.